There is one stock that is about to skyrocket. I'm not going to hold you hostage here. The company is Tarsus Pharmaceuticals, ticker symbol TARS. They do eye care drugs. If you're new to this channel, we have had success with some serious movers. Bloom Energy is one stock, this power generation stock, moving up 200% since it was mentioned. Another one is A-Lab, the semiconductor stock. That one moved up about 120%. And MP Materials is another one. This is a rare earth company moving up 60%. And that was after the $400 billion Department of Energy announcement. So, you know, it's not like we're insiders or anything like that. We're just reading the chart and listening to the news and understanding the sector. So those are some examples. But this company, TARS, has over 100 million in product sales for its lead product. They increased 150% those sales year over year. So very big increase. They also have hundreds of millions of cash. So this is not a fledgling pharmaceutical company. It's also not a massive company like Novo Nordisk or Pfizer or Merck, which you might get in at the right time, you might not. You know, it's hard to move the needle when a stock moves 1% or 2% a day. So this is the company, TARS. We'll jump into a breakdown in a second, but if you're new to this channel, the community that goes along with this channel is called Stocks Community. And we're running our best sale ever, $19 Black Friday 7-day trial, available for a limited time. So if you want to take advantage of that, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's the company Tarsus. What's really confidence inducing is this 100% institutional ownership. That's a big deal. Here are some of the diseases that they treat. They do eye diseases. So eye care is a huge market. Of course, everyone having eyes. And the company's a multi-billion-dollar company. So it's not like you're jumping in some venture capital funded company that might go to zero tomorrow. And the reason I say that is when we look over at their product sales, they sold $100 million just in Q3. So that's a big increase, 150%. And they are losing money, but they're only losing 10 million or so. So it looks like they're going to be able to turn the corner because they have some money here as well to keep as dry powder in the bank. It's $400 million to invest in drug development. So sure, they could raise money. That's part of what this tool is for. It gives a little bit about the company, but it also tells you, you know, they could sell some shares into the market. That's what this high rating indicates. This could result in a sudden and large price drop. And the nuance of that is if we look down at how they've raised money in the past, these are underwritten offerings. So these are from selling shares to investment banks as the intermediary. So 100 million at $32 in March of 2024. If we look at that price here, that was a while ago. But if we see that the price was pretty close to the price they raised the money at, that's a pretty good deal. So here's March of 2024, and you see it's pretty much exactly where the stock was trading at. So there was earnings, you know, a quarter later, and there was a dip, but I don't think that dip related to raising the money. So for that reason, I don't think there's too much to worry about in terms of this company raising money through some type of offering that's registered, having a big effect on the price. They could raise money just by selling shares into the market. So we can see this financial instrument is registered. This is a more recent one in 2023. And they can raise up to hundreds of millions, but they've only raised 20 million from this. So it seems unlikely that they're just going to start dumping, hundreds of millions of shares onto the market, which is what this tool tells us, that this could lower the stock price if that happens. So that's a pretty in-depth look at how to be careful with companies that are newer. Tarsus is definitely newer. It is a $70 stock, but it only trades a couple 100,000 shares a day. So let's say they traded 100,000 shares on a given day, they might only trade somewhere around $10 million a day. So you can put 100K in here, no problem. But if you're an institution or if you're a high net worth individual and you want to put, I don't know, 10% of your 100 million portfolio in here, that's how much the stock trades in an entire day. So you're going to be moving the stock if you do that. You can do it, and they do it, but it's generally over multiple days that an accumulation like that happens. And we can see that kind of accumulation here after the August earnings result. So if you have less money than that, you get to just sort of ride like a little kayak on this thing. You get in right after earnings, and then as they accumulate, you get the gift of other people buying the stock while you're already in it. But right now, earnings already happened. We're forming this flag, so it's slightly different than that after earnings pattern. And there's a clear level to buy it over, which is why it's such a great opportunity. You can get in right here, risk $1, and look for 10 or more to the upside. So that's the idea. TARS is the ticker. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post once a month. And if you want to take advantage of this $19 Black Friday deal, it's the lowest it's ever been, head over to stockscommunity.com. You'll see 2 testimonials from our superstars. I think they made $6,500 and $10,000 respectively.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.